My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's game plan, we've got to talk about Nvidia earnings. Nvidia is popping today on the back of those earnings. Yesterday, we talked about how it was likely going to be a good report and how good of a salesman Jensen Huang is, right? He is a great salesman. He always says things. One of the quotes, again, charts, the demand for AI chips is off the charts. That's a quote. All right. So when you talk like that as a CEO, it's going to pump people up. And really, we were at a borderline crossing where the AI narrative was beginning to crack. The question is, based on chart analysis, has anything changed? Is the correction now negated by Nvidia earnings? And we're going to answer that question in just a minute. First, let's get into the jobs data this morning. We got jobs reports here, and what we have is non-farm payrolls coming out stronger than expected. This is the September report, folks. So again, this is a couple months old, but I do want to mention it because it does play in to whether or not the Fed will cut rates. So number one, 119,000, better than the 53,000 expected. That is a stronger number. Unemployment did inch up to 4.4% from 4.3%. Now, some people looking at that headline number would say, maybe the Fed does need to cut. The actuality of it is that the participation rate, people sitting on the sidelines not looking for work, went down, and a lot more people came in to start looking for work. And what that does is it raises unemployment because more people are unemployed but looking for work. And so it's not really a negative there per people getting laid off. So really not a bad number. And then lastly, jobless claims for a few weeks ago reported at 220,000. That continues to be fine. So let's be fair. The odds of a December rate cut are slowly slipping away. But what we're seeing here in the futures is that the markets are actually okay with that. This is the result of the S&P futures here from that report this morning. And we can see the market is actually happy to see that the economy is not slipping quickly towards recession. And so the markets were already up on the back of Nvidia in the overnight and now are moving a little bit higher on this jobs report, even though the likelihood of a Fed cut continues to head towards zero for December. All right, now, the big question we have to answer is, does this change our outlook based on what Nvidia reported? And the answer is it does not. So one of the things we're keeping an eye on here is the charts. Remember, the charts are the only unbiased, pure form of analysis we have. You know, you go to CNBC, you go to Bloomberg, you go to anywhere, and we're always going to get some sort of narrative, some analyst upgrading, some analyst downgrading, the viewpoints of various technicians, right? The idea is, even beyond me, the charts are our purest form of honesty. And the charts continue to show that until we take this area out on the S&P around 69.15, 69.20, that this is a short-term top on the markets, maybe even a cycle high. So right now, sure, Nvidia's going to have a gap up or create a gap up in the S&P 500. But number one, we're not even going to get close to this area up here on the S&P. And number two, even Nvidia, take a look at Nvidia here. Nvidia's up, but it's only back to 196 and change. All right, looking at the daily chart, we're only going to trade back here on Nvidia when the highs of just last month, late October, were all the way at 212. And one of the things that I learned as an early investor and trader in the markets is that once you see better news occur in a company, but the stock is unable to get and make a new all-time high, then that tells you about what is likely coming in the future. In other words, if you look at apples to apples, you have X earnings and the result should be Y move in charts. If better earnings come out, the stock should go higher, right? And just plain logic, right? Once you see better earnings, which what we saw, so these are the best earnings Nvidia has ever had, all right, and the best guidance that we've ever seen from Nvidia, and the stock is not back to all-time highs, that is telling you something. You're getting essentially a negative divergence in the stock price. And so just be aware of that. While the numbers were fantastic, granted, we can talk about all the question marks that I've brought up to you guys in the game plan over the last few weeks about data centers being put on hold, about shuffling money back and forth in a shady way between all of these companies, between all of the depreciation and how that's calculated for the hyperscalers. Regardless of that, the price action alone on Nvidia is telling us something about what is likely coming. All right, now, should Nvidia rally up? There's this great trend line here on Nvidia going back to 2024. Clearly, this high and the recent all-time high, that would be a major level of resistance should we get up there. Now, listen, we're a mile away at 196 and change, but let's keep our eyes on that. All right, now, quickly going to the Nasdaq 100. Now, we talked about this yesterday on Nvidia earnings. I said to you guys, listen, the Nasdaq 100 has confirmed a breakdown. But I said, don't be surprised if we rally back to the underbelly of that parallel, which would be a retrace to the scene of the crime on good numbers and then get rejected. Well, let's take a look. So right now, where are we? Well, here we confirmed breakdown right here, right? And now what's happening is you're doing exactly what we talked about, potentially coming back to this level, which would then create the next push down effect for the Nasdaq 100. And so again, we're watching to see. Now listen, we're not up there yet, so let's be fair. We're trading right around here, but let's see if we do get up into that parallel from the underside, which will now, based on technical analysis, work as resistance on the chart. All right. Now, one of the things I talked about yesterday was a potential black swan issue in the markets. Okay. We talked about Japan, and Japan's 10-year yield was spiking more and more. Yesterday, we even looked at it, and their yen continued to weaken. Let's do an update. Has anything changed, or has it got worse? Let's go to the charts and find out. The yen is continuing to move higher. That means it's weakening against the dollar yen, I should say. The dollar yen is continuing to go higher. That's telling us it's getting worse in Japan. Look at the 10-year. The 10-year, look at this is today, folks. Another big push up, nearing 1.85 on their 10-year, closing back down or trading back down around 1.817. But interest rates in Japan are continuing to go up. Be careful here, guys. This is something that, again, could spread like a wildfire across the globe to all the countries that have debt to GDP well above 100%, which is also the United States. Now, the U.S. isn't quite as bad as Japan. Japan's at 240-ish% debt to GDP, but at 130%, the U.S. is vulnerable to a credit crisis or a debt crisis, essentially. So watch this closely. This is something, again, just yesterday after I talked about it, I noticed a few of the bigger players out there starting to talk about it as well. This is something we must watch, all right? This could create by itself a mini stock market crash, like 10% down in a matter of days, if it really continues to the upside. All right, let's get into some other factors here. So in terms of Nvidia, right? Nvidia, just going back to the chart here, trading at 196.20. If it does get up here, this would be your first level of resistance. There's a gap fill at 199, just a break above that. That would be first resistance right there. All right. So again, potentially a day trade. I don't think there's much other than a day trade there. Palo Alto Networks initially fell on earnings. It is climbing back this morning, basically slightly lower. Based on the daily chart, it's not a big enough move here to get me out of bed to trade this. I would need a flush quite substantially lower, 176 and change, before I would probably nibble on a trade on PANW. Walmart initially saw some selling on earnings this morning, then rallied back, pulling back just a little bit. Daily chart has been stuck in a beautiful parallel. It was hammering on the lower end of the parallel going into earnings. It's been pushed back up. So as a technician, right now, as long as we're inside of this range, right, up and down, there's really nothing for me to do. However, if we get a break and confirmation below this parallel, price should start to decline faster and faster. So as a technician, as a chartist, that's one of the things I'm looking for today with a move higher on earnings. There's really nothing here to do, just a wait and see. All right, we're going to get into some other charts here. We have to talk about crypto. So Bitcoin is starting to fall again this morning. Yesterday, we talked about would it confirm the breakdown below this major trend line, which basically is the trend of the bull market, right? Going back to 2023, this was here you had this was the bear market, and then this was a lot of chop, and then this is really where we started to take off dramatically to the upside. And that's why it's important to start the trend line there. We can see it pierced a couple times, hit right here, and then we've broken below it. But we have not yet confirmed. Yesterday did not confirm a breakdown on Bitcoin. Now, maybe it confirms today. It can still confirm. If it confirms, what do we know that means? It means once it confirms a breakdown, while it could bounce, the odds start to favor an eventual move down towards 73, 75,000 down there. All right. So interesting to see. And by the way, this is very interesting, right? So the idea here is that Bitcoin being a risk on, risk off asset, well, really, today the stock market's going up, but Bitcoin is still falling. I mean, again, I've seen the sentiment in the crypto markets. It is nasty. Now, listen, I will be fair with you guys. Yesterday, I picked up a little ETH at key support. I'll show you guys that chart. I even nibbled on Cardano. I've nibbled on Bitcoin, but very small at this point. Now, listen, I still think ultimately it's going to 73 to 75 before it has a good shot of really a sustainable bounce. But again, I want to get some skin in the game for a short-term bounce, and Bitcoin is oversold in the near term. All right, so again, we'll have to watch and see. I'll show you the ETH chart here, right here at the lows yesterday. You can see the parallel trend lines here, and we're coming right into this epic support. So I nibbled on my first buy right at that lows. We are still in the money on this, just slightly on this long trade. All right, again, that's in Smart Money Crypto on verifiedinvesting.com, folks, where I give out my crypto trades, Smart Money stock, where I do my swing trades on stocks and ETFs. And then we have Smart Money Commodities and Miners, which is more futures-based and ETF-based on commodities. All right, let's take a look here. So going on, folks, gold. What's gold doing? So gold continues to be flat on the day. I put in this wedge pattern. Wedges essentially are consolidation phases, right? So when you have two lines that are coming together, price gets tighter and tighter and tighter. And that's really what's happening here, right? We have this big move, then this smaller move, then the smaller move, then the smaller move, etc. Right? Now, the kicker is this, is that at some point, gold's either going to break out or it's going to break down, one or the other. Whichever way it breaks, we should get a big move in that direction. If it breaks to the upside, easy tap of double top, maybe even a $5,000 move to 5,000 there. If it breaks here, it should have a small bounce around 38.90, but likely we head back down towards 36 to 3,500. So the consolidation and which way it breaks is going to be instrumental in the next big move on gold. Looking at silver today, guys, silver's kind of in the same boat. With silver, I'm using a much bigger parallel that goes back to the financial crisis low in 2008, the COVID low in 2020, and the bull market high in 2011. And you could see each time it's hit this line, rejected. And then if we go back to the daily chart, we have the white trend line, which is essentially our wedge pattern. See this trend line here? These two lines are converging. And so the same sort of thing. What are we going to do here, right? Are we going to break out or are we going to break down? Which way is it going to go? I'm waiting to see myself on the charts. All right, let's go to oil real quick. Oil was trying to have that cup and handle breakout. It again got rejected. Really, oil, it's a tricky scenario for oil right now because every time it tries to break through, here it tried right here and got slammed. Then it came back up again, used a lot of energy. Closed on or just above, slammed again yesterday, although a smaller slam down. Today, it's pushing back up. This is still technically a cup and handle, which is a bullish pattern, okay? So it still favors a move up, but you got to see the breakout above this trend line. That's key. This line down here denotes where the pattern would fail. If, again, any daily pierce or close below this line, it would obviously negate the chances of it being a cup and handle pattern formation. All right. Natural gas is up next here, folks. Let's take a look at nat gas. Nat gas, again, pulling back a little bit today. It's so close to that big resistance zone right up here. We'll have to keep an eye on that to see if it does finally push into it. My guess is it will eventually. But again, at that point, I'll have to decide if I want to pull the trigger on a short or not on the charts. Now, what I want to do here, folks, is actually go over some more charts on key mega caps, because some of these mega caps are actually looking interesting, right? So if we look at, for instance, Meta has kissed my lower support line, getting a little bit of a bounce today. I would have liked to have seen it actually touch 575, getting a small bounce today. All right. So again, look at the sell-off in some of these. I think Meta is down close to 30% from its all-time highs here. Let's take a look. To yesterday's lows, it was a 27% decline. Now, contrasting that, you have Google, which has soared. I mean, look at this move on Google. Even today, it's up significantly. This is at all-time highs on Google as the vibe over Gemini 3 just launched, and this is going to go. This has been going up. Now, this chart on the weekly is very extended, folks. In other words, Google/Alphabet was lagging the other AI plays. It's now fully caught up and potentially a leader. Okay. Now that to me tells opportunity for a shorting opportunity potentially. Now listen, to short it, we really have to look for key verticals or parallels. Again, we could make a case that you have something like this. You know, I would generally trend somewhere like this area, right? So you have these highs here, maybe even up a little bit right there. So again, might go a little bit higher on this, but somewhere around 325, if it gets there, that would really talk about a max out of price based on this consolidation along this. Then it rejects, consolidates along here. And the idea is if it gets up to there, rejection is likely. Let's take a look at other players. We haven't looked at Tesla in a few days or so. Tesla, look at this, guys. This is an important trend line on Tesla here. So Tesla was holding the line. It got below. It hasn't confirmed yet, but it's concerning. It has not regained this trend line. So it's not a confirmed breakdown yet, but let's see today. Look at where it's trading today. It's trading right on this trend line. We need to see it recapture to recapture the bullish bias. Right now, it's a neutral because it's closed below, but it hasn't confirmed. We need, again, if you're a bull on Tesla, we need to see this get back above, close above basically 413.50 on the chart. But really remarkable how you can see how important this trend line is. It was such good support along here. It got below, and now every time it's gone up and pierced, it's gotten rejected. Watch to see if anything changes there. Microsoft broke key support. It is bouncing as well today, right back to the white line. If it doesn't recapture this white line, it's likely headed to 468 down to 455. This year zone, this is a high pivot going back to this level here on July 5th, and this pivot high to August 2020, December 2024. All right, so again, notice double top, classic double top in the chart. Price got rejected here, and once again, it got rejected here. Now the problem is, what has this done, guys? It's made a low, and what's this? Lower low. So you see that? So you now have a low, lower low with a double top. Technically, even this double top was it was actually a lower high, slightly down sloping. So a lower high and lower low. That means Microsoft has begun a downtrend in price. And remember, folks, the charts are very simple to read once we throw away our emotion. Is it a higher low? Is it a lower low? Is it a lower, like these type of things? Is it a gap fill? Is it a double top? Is it a topping tail? There's all definitions to this. I can teach anyone to read charts. The Winning Trader series goes on sale on Monday, 50% off. It's going to be a huge event. Green Monday is on Monday. I'll be live trading from the studio. You guys will see my entries. It's going to be fantastic. But the point is, I can teach anyone to trade based on technicals. What I can't do is make you learn how to control your own emotions. It's something I struggle with even to this day, and it's something that we all have to struggle and basically achieve. So think about that. All right. Think about that very much so. All right, guys, I've got to get going, but I wanted to thank you all for coming out. Don't forget, post questions that you want me to look at. in the comments on this video on YouTube, and I will try to address some of those every game plan at the end. You guys have a great rest of your day. Thanks so much for coming out. I'll see you soon. Take care.